Now, you've probably heard a lot of people say that real estate is a good investment, that it's a solid place to park your money. But I'm here to tell you that it's more than that. Real estate is not just an investment, it's a wealth-building machine, a financial fortress that can withstand the tests of time, market fluctuations, and even economic downturns. First, let's talk about the fundamental principle of real estate: ownership. When you own real estate, you have something tangible, something that has intrinsic value. Land is limited. Buildings serve essential purposes: shelter, commerce, storage, and more. Unlike stocks or bonds, which are simply pieces of paper or digital entries in a system, real estate is real. It's something you can touch, something you can see, something that will always have value. And here's the kicker: as populations grow, the demand for real estate increases. More people need homes, more businesses need offices, more retailers need stores. The land isn't getting any bigger, but the number of people who need it is. This simple fact puts the laws of supply and demand firmly in your favor when you invest in real estate. Let's talk about one of the most powerful benefits of owning real estate: capital appreciation. This is the increase in the value of your property over time. It's the money you make just by holding onto a piece of real estate as the years go by. You see, when you buy a property, you're not just buying a place to live or to rent out. You're buying an asset that has the potential to grow in value. And here's the thing: historically, real estate has appreciated in value consistently. Sure, there are ups and downs in the market, just like any other investment. But over the long term, real estate has shown itself to be a reliable vehicle for capital appreciation. This is because, as I mentioned earlier, the demand for land and property is always increasing. But capital appreciation doesn't happen by accident. It's the result of a carefully selected property, in the right location, at the right time. It's about understanding the market, recognizing trends, and being patient enough to let your investment mature. And this leads me to one of the most important points I want to make today: the importance of not selling your real estate too soon. Too many people make the mistake of selling their real estate too quickly. They get a little bit of equity, they see the market rise, and they think, hey, I can make a quick profit. And sure you can, but what happens after you sell? You're left with cash that over time loses value due to inflation, cash that you'll probably end up spending on something that doesn't appreciate in value. But if you hold on to that property, if you resist the urge to sell, you allow capital appreciation to work its magic. The longer you hold on to real estate, the more valuable it becomes. I've seen properties double, triple, even quadruple in value over the years. And that's money in your pocket without you having to lift a finger. You see, when you sell a property, you're not just selling a piece of land or a building, you're selling your future wealth. You're giving up on the potential for further appreciation. You're cutting off your passive income stream. And for what? A quick buck? A momentary gain? That's not how you build lasting wealth. Let's also talk about leverage. Leverage is one of the most powerful tools in real estate. It allows you to control a large asset with a relatively small amount of money. When you buy a property, you typically don't pay the full price up front. You put down a percentage, let's say 20%, and the bank finances the rest. This means that you can own a $500,000 property with just $100,000 of your own money. Now here's where it gets interesting. As your property appreciates in value, that appreciation is based on the total value of the property, not just the amount you've invested. So if your $500,000 property increases in value by 10%, that's a $50,000 gain. But because you only invested $100,000, your return on investment is actually 50%. That's the power of leverage. But it doesn't stop there. You can also use the equity in your property, the difference between the property's value and the amount you owe on it, to finance more real estate. This is how you build a portfolio, how you scale your investments, and how you turn one property into many. Now let's not forget about cash flow, the lifeblood of any real estate investment. When you own rental properties, you're not just sitting on an asset that appreciates over time. You're also generating income every single month. This is money that comes in whether you work for it or not. It's money that can cover your mortgage, pay for repairs, and still leave you with a profit. Cash flow is what gives you financial freedom. It's what allows you to quit your job, travel the world, or simply enjoy life without the constant stress of worrying about money. And the beauty of real estate is that your cash flow increases over time. As you pay down your mortgage, your expenses decrease, while your rental income typically increases due to inflation and market demand. Let's talk about taxes. The tax advantages of real estate are another reason why it's such a powerful wealth-building tool. The government incentivizes real estate investment because it knows that private investors help provide housing and commercial spaces, which are essential for a thriving economy. One of the biggest tax advantages is depreciation. Depreciation allows you to deduct the cost of your property over time from your taxable income. This means that even though your property is likely appreciating in value, the government allows you to treat it as though it's losing value, reducing your tax liability. Then there's the 1031 exchange. This provision allows you to sell a property and reinvest the proceeds into another property without paying capital gains tax. It's a way to defer taxes and keep more of your money working for you in the market. And let's not forget about interest deductions. The interest you pay on your mortgage is tax deductible, further reducing your taxable income. These are just a few of the many tax benefits that make real estate an incredibly tax-efficient investment. Finally, let's talk about the long-term impact of real estate on your family and future generations. Real estate isn't just about making money for yourself. It's about creating a legacy. When you own property, you're building wealth that can be passed down to your children and grandchildren. You're giving them a head start in life, a foundation on which they can build their own wealth. Imagine this. Instead of leaving your children a pile of cash that they'll likely spend, you leave them a portfolio of income-generating properties. You leave them assets that will continue to appreciate in value, that will provide them with passive income, and that will give them the financial freedom to live life on their terms. That's the power of real estate. So, ladies and gentlemen, I want to leave you with this thought. Real estate is more than just an investment. It's a path to financial freedom, a vehicle for creating wealth, and a tool for building a legacy. But it requires patience, discipline, and a long-term perspective. It's not about making a quick buck. It's about building something that will last, something that will continue to grow in value, something that will provide for you and your family for generations to come. Don't fall into the trap of selling too soon. Don't be lured by the temptation of a quick profit. Hold on to your properties, let them appreciate in value, and enjoy the benefits of cash flow, tax advantages, and leverage. Invest wisely, think long-term, and you'll see the incredible power of real estate in your life.